Well, IGL reported an inline set of numbers in the fourth quarter of financial year 2019. Now, it witnessed a multi-quarter high volume growth, but its unit margins slipped by nearly 3% compared to last year. To give us more details on the quarter gone by, joining us now is the MD of the company, E.S. Ranganathan. So, sir, to start off with, volume growth was yet again strong in the fourth quarter of financial year 2019 for IGL. So, what has aided that, and how do you see the volume growth to be in the ongoing quarter and for the financial year 2020?
Yeah, the volume has grown 28%. The turnover is now 1694 for quarter 4 compared to the last year's 1347 crore. And for the year also, we have a double-digit growth of 17%. And based on that, we expect that the next year also the growth will be in double-digit. But of course, the revenue depends on the gas cost, but we will have a quantity growth of double-digit.
Your unit margins, that is EBITDA per SCM, now that fell by nearly 3% in the fourth quarter. What would you attribute this to?
Yeah, EBITDA we are, targeting something between 5.5 to 6 rupees per SCM.
Okay, but then why did it fell in the fourth quarter compared to last year by around 3%? EBITDA per SCM, it fell by 3%, right?
Basically because, the industrial volume has also grown. It has grown 24%. So that is that is something which brings us less margin. That is why there is a small dip in the EBITDA.
Okay. In the first quarter of FY20, I remember you have taken a price hike. So how have the margins held up so far in the first quarter?
No, it's basically the margins depend on foreign exchange and the gas cost and the minimum wages. So the minimum wages and gas cost doesn't change during the fourth quarter. But the foreign exchange has been quite stable. That's why the margins have increased.
Okay. And for FY20, so how many outlets are you planning to open? Any targets that you have set so far?
Yeah, we have set a target of 70 more CNG stations.
Okay, that's for full financial year 2020, you're saying?
Yeah, in 1920. Yes.
And this is including the new geographical areas that you have just acquired?
Yeah, including the new geographical areas. Actually, except until the 9th round, we have opened CNG outlets in all the stations that we got up to 9th round. In the 10th round also, we will be opening a couple of stations this year.
Okay. And so how has been the private car conversion lately been for 2019, if you see? And we are expecting a double-digit volume growth for FY20. So what, according to you, would support this volume growth for FY20?
Yeah, double-digit growth has been achieved. The number of cars converting has been fairly constant at 5,000 a month.
Okay.
And we expect an addition of at least 1,000 buses by DTC in this financial year. So thereby, and then the commercial vehicles are also getting converted in Delhi due to the green tax that has been imposed. So we expect a growth that also to contribute to the growth.
Okay. And on Haryana City Gas, can you give us more details and or any updates related to that that matter that is going on the court?
Yeah, the Supreme Court has quite categorically said that the IGL will be taking over Haryana City Gas, but the valuation is not yet complete. So the court will review it again after the vacation. So we expect a verdict by July end.
Okay, and what is the kind of volume upside that would come in because of this acquisition?
Volume, since we are already supplying the domestic gas to them, we expect that with the opening of new outlets and connecting new commercial, industrial and domestic establishments, we are looking at a growth of 0.1 to 0.2 million depending on when we get it.
And do you see implementation of BS6 and the government's push for e-vehicles to have any impact on your volume offtake going forward?
We don't expect any big impact in the near term because the EVs have not been very, popular among the people because of the high cost and the longer charging time as well as the battery replacement cost. So unless that is solved in the near term, we don't expect that EVs will make a great impact on CNG sales at least.
And any impact of implementation of BS6?
GST of BS6, actually with BS6, the diesel engines will become very costly. So we expect that, the new cars will not be diesel, rather it will be petrol, dual fuel and pure CNG.
So you're expecting a volume upside because of that?
Yes.
Okay. And recently you have won 4 new geographical areas in the recent bidding. So what is the kind of capital expenditure that you have planned for these areas, and when do you expect them to start contributing?
Actually, typically any GA first 2 years we make the backbone infrastructure of pipeline. So that will entail investment of 150 to 200 crore depending on the spread of the GA, and the revenues will start flowing from third year onwards.
Okay. And what are your overall capital expenditure plans for FY20 and for the next 5 years, keeping in mind that you have won these 4 new geographical areas?
In FY20, we hope to spend a capex of at least 1,000 crores. And that will be 500 crores in the existing areas, and in the new areas 50 to 100 crores each area. And going forward also we will maintain this capex for another 2 years.
So now as you're expanding in new areas, your volume growth would be largely back-ended. So what is the kind of margin or return contraction that investors can see on the current numbers?
You see, the margins have been fairly stable for us in the CNG sector, and we have been able to pass on the increase and decrease in cost to the consumers, so that CNG is competitive with respect to the competing fuels of diesel and petrol. So we expect that this year also it will continue.
So you're expecting margins to remain largely stable for FY20 also?
That's right.
Okay. That would be all, sir. Thank you for speaking to Bloomberg, sir.
Thank you.